Hey everyone, this is Mayhem Talking Markets, Monday, December 27th, and it was quite a nice day in the market indeed. Across all the major indices, we're pretty significantly up, not the least of which was the NASDAQ. And, kind of across the board, all the major large caps were pretty solidly bid. There were some exceptions inside the NASDAQ, but overall, it was a pretty good day to be an index investor. In the individual stocks, it was a little bit different. Breadth wasn't so kind, so there were still a fair amount of NASDAQ issues not being bid up. It was kind of evenly split between advancers and decliners. There was a lot of unchanged in the index as well. So it's kind of illiquid holiday trading week. A lot of people aren't trading at all. But nevertheless, I think it's worth kind of diving in, talking about where we are, because we've had a little bit of a tumultuous couple of weeks, really, since late November. The markets have been pretty choppy, and then we had that pretty choppy September and early October as well before this. So a lot of people are a little unsettled, and I just wanted to go over a bigger term, sort of longer term, I guess I could say, picture on the NASDAQ, and then also kind of zoom in where we are now and just talk a little bit more about it. So first and foremost, this is a chart of the NASDAQ 100. So that's the kind of 100 biggest companies inside the NASDAQ, and it's current as of market close today. And this goes all the way back to 1988, so we are going quite a ways back in time here. But really what I wanted to illustrate is, the buildup that we had to the dot-com bust, and kind of the buildup that we have here. And you can notice there's some similarities, but there's also a lot of differences. The biggest similarity that you could see is this kind of slow and gradual buildup. We don't have anything representing this crescendo, this kind of like euphoric rally. Some people have called for it if we sort of break out of this trading range that we've been in, basically, decidedly breaking out of this sort of trend channel to the upside, that perhaps I could release a last gasp of upward momentum, sort of panic buying. And we see what that kind of buying tends to lead to. But it doesn't seem like the market's there yet. I mean, we can see again, this was a pretty structured uptrend. There were some reversions. This got right back to the cloud, and it was a bit up. There were reversions to the Tenkin and to the Kijun here. So that in this chart, the blue line is the Tenkin, the brown line is the Kijun, and so I think it's important to just take into consideration what the top of the dot-com bust looked like on a monthly chart versus what this current period looks like on a monthly chart. So it's a similar span of time, and it's a completely different kind of move. And while it looks pretty big, I think it's important to remember that this move, this kind of parabolic move in the NASDAQ started about like, let's call it 1800 or so, and really moved all the way up to over or just around 5,000. So that was a pretty significant move in a short period of time. Whereas in this same period of time, you're talking about a move of maybe like, let's just call it 8,000 to 16,000 change. So basically a doubling. So it's a sizable move, but it's not quite the same, and it's not. Some of these monthly candles here were quite big. We don't really have a lot like that except for the bottom off of COVID. So it's also a more gradual move upward. So I think that's all really important to take into consideration. Just looking at the monthly chart, you could see that the times that we saw the NASDAQ break below the cloud were really where the price action got violent to the downside. We had support at the cloud here, but really after the 2000 dot-com bust, we saw a break below the cloud. We saw an attempt to get back to it. It acted as resistance. There was one monthly candle that broke into the cloud. That was it. And then down we go. And we could see that bearish cloud twist there as a sort of omen that, perhaps this price channel wasn't necessarily going to be where the real recovery was. And you could see this. This is really the whole pre-great financial crisis housing boom era. And so, techs never really recovered. Even the Ichimoku cloud gave us a bit of a warning that we were trendless. And we had that twist back green. But, we definitely saw during that route selling that took us back to lows that were very close to the dot-com bust. Similar levels where there was appetite in price before, and where there was a lot of price interaction in the past. So, a couple things that are interesting about this is that, we had some warnings that we couldn't get above the cloud, that we're staying below some of these key levels for quite a while, and we got above them. It wasn't able to hold for very long. Obviously we're looking at this in monthly terms, so it's a long time in that sense. But if you're a longer term investor and you're using this as a method to kind of gauge your confidence in the NASDAQ, your conviction and portfolio sizing, during this whole period, you're not particularly confident that we're in an uptrend. Whereas during this whole period, this was an uptrend until it wasn't. Now, obviously, when things start just going straight up, that warrants a whole different kind of caution. And obviously, when we broke below the Kijun and even when we broke below the Tenkin, you could see that the downward move accelerated. And then when we broke below the cloud, we further accelerated. So there are certain signs that you could see in this form of technical analysis that can give you a sense as to your conviction behind the trend, right? And the ideal situation is that the price candle is closing above the Tenkin and the Kijun and the cloud, right? So you see that in this trend here, and you also see it as we started to recover. You see it here, right? So we broke above the cloud, we broke above the Tenkin, the Kijun, and we've had pretty consistent performance the whole time above the cloud throughout this post 2009, 2010 bull market till now. We've had a test of these levels, but we really haven't even retested the cloud since. So the NASDAQ's been in a very strong monthly uptrend for the better part of the last 11 years. We go into a weekly time frame, and you can see that it's a pretty similar picture, although it looks just a little bit different from trend health. That is to say, in the 2018 route, we actually broke below the cloud on a weekly basis, and we had this reversal, and we were able to break back in and above. But this was an area of a briefly trendless, then downtrending, then trendless again. So you could call that consolidation. And it was certainly a situation where a lot of selling happened very quickly. People that were in the market then kind of remember the tantrum about rates and quantitative tightening that set this into motion. And once we saw that that was no longer going to be a big issue, the Fed really started to signal that in really summer of 2019. But there were some early indications that perhaps they would be slowing, and that also we would see more corporate buybacks coming into the market. And there was essentially other areas where liquidity was originating if it wasn't coming directly from things like QE or indirectly. So nevertheless, we moved into this period of time pre-COVID. Everything looked great until it didn't, and then it really, we had a pretty significant crash in prices from the high. It wasn't necessarily a bear market. It was a pretty violent correction, but still, you see that price action. It was pretty violent in the NASDAQ. And then we bottomed right at the bottom of the cloud, pretty much on the nose, and moved back into an uptrend, moving above the weekly Tenkin and Kijun, and eventually breaking back into this uptrend that we've been in since. So we were briefly trendless, and we were briefly in a downtrend. So you could definitely argue that we've had some variance in the trend, some trend resets in the NASDAQ that we didn't necessarily see in the S&P when we went over that yesterday. It wasn't quite to the same extent in December of 2018. And other than that, though, you can see there's a lot of interplay with the Kijun and the Tenkin when there's reversion, right? You see these consolidation periods, and you see interaction, especially with the Kijun on some of the deeper pullbacks. And the one most recently in December, we saw the same thing. We saw that touch on the Kijun and a bounce, and now we're seeing a continuation of that. So that's healthy. Momentum favors further upside. Volume participation's been pretty healthy as well. So it looks like, the NASDAQ may be the next major index to be making an all-time high, which I think is just about, if you look at intraday levels, I think it's just less than 200 points away. So we're going to go to the daily chart here. And we're looking at the NASDAQ going back to the summer of 2020. And basically what we see is a pretty consistent uptrend. There's been some periods of time where we have tested the cloud and gone trendless or even briefly into a downtrend. Here's a trendless state. Here's a downtrend state. You see that cloud twist kind of warning you of this price volatility. Another cloud twist here. and we had some choppiness. So, those cloud twists are important to watch as well. But you can see there's been several interactions with the cloud and even threatening of downtrends. But pretty quickly from there, it seems like appetite comes back. That's why it's so important to look at different time frames, because sometimes things can look pretty messy on a daily chart, like we see here and here, that, oh, we're looking at a downtrend, things are getting pretty messy. You did see this volume shelf here act as an area of support, just as you saw that, on a weekly time frame, this was just a pullback to the Kijun. So these kinds of things are certainly going to keep happening, but we have to use multiple time frames sometimes to get a better sense as to the overall trend health. So even though we were technically in a downtrend in a couple days here and a couple days here, that, and even a couple days most recently here, that didn't necessarily portend to an end of the bull market. It was just more of a corrective and consolidative phase. So that's important to look at, but it still gives you a sense as to, should you be more risk adverse, down here potentially because you're in a state where you might be threatening a real downtrend? Yeah, probably so. It probably makes sense to be mindful of that as you change time frames and as you see more vulnerability in the trend, right? So this cloud twist was kind of prescient. It definitely gave a sense that there was some potential for this, double top to give way. And you saw some warning sign here. So perhaps if you were watching this and you said, okay, well, the cloud's twisting. If we break below this Tenkan, I'm going to sell. If you break below the Tenkan, this gap down here, you get out and you miss all of that. So there's systematic approaches you can take with Ichimoku cloud analysis that can help you with risk management, both getting out and getting into positions. And looking at multiple time frames for convergent signals can help too. Another thing that you'll notice with this trend is, we had the most recent volatility here. It really started in late September, early October, even mid-September, you could say, during that monthly window of weakness, post-OPEX. And we had a nice, really kind of strong rebound throughout much of October. After the early part of October, there was some indigestion. We had a nice rebound in price. It's kind of feeling like after these most recent drawdowns that we've had, and it hasn't been quite as pronounced as perhaps we saw in this period in September to October, but we still have this sort of consolidative move. It's kind of similar to what we have going on September, October. So it seems like we're kind of coiling up for a move higher. So I wouldn't be surprised to see some continuation to the upside on the NASDAQ as we potentially break above all-time highs. I think that would be a pretty constructive pattern to see the NASDAQ kind of mirror the S&P in that sense. I know that they have different composition. The S&P is 25%. Those 5 big companies, the mega caps, and the NASDAQ's 40%. So we're really looking for mega cap outperformance in the NASDAQ 100 to get to that all-time high. Nevertheless, momentum is on the side of the bulls in the daily time frame. Participation's been decent. It hasn't been amazing, but you can see there's still decent volume compared to previous volume. So we're really looking for some continuation throughout this week to close the week, the month, the quarter, and the year. So it'll be a pretty important candle, and that sets the tone for January. So until next time, this is Mayhem talking markets, and hope you tune in, subscribe, like if you enjoyed the video, and check me out on Twitter. The Twitter handle is Mayhem4Markets, and then my website is marketsandmayhem.com. So until next time, everyone, catch up with you later.